Imagine outperforming the S&P 500 since 1989. One Fidelity manager didn't just dream it, he achieved it. This is the story of Joel Tillinghast, the astute manager of Fidelity low-priced stock. Since the fund's inception in 1989, he's been delivering impressive returns for investors. We're talking about an annualized total return of around 13%, folks. This isn't just good, it's extraordinary. It eclipses the benchmark Russell 2000 index and even the mighty S&P 500 index. Now, wouldn't you want to know his secret to success? The secret lies in the unexplored territories of the stock market. This is where seasoned Fidelity manager Joel Tillinghast has found his success. His hunt for treasure, not in the glimmering lights of large-cap stocks but rather in the overlooked small and mid-cap stocks, has proved rewarding. Finding those that trade at a discount to their intrinsic value has been his winning strategy. But he doesn't stop there. Tillinghast extends his exploration to the international market with a keen interest in Japan. For Tillinghast, it's all about finding value where others don't look. But finding value is not the only key. There's more to this winning formula. Let's delve into Joel Tillinghast's philosophy. He sees investing as a continuous learning process. It's not static, it's dynamic. It's about adapting, evolving, and growing with the market. His mantra: constantly learn and adapt. But there's another layer to his strategy. Tillinghast doesn't just focus on the present, he peers into the future. He urges us to consider the long-term potential of a company, not just its current status. It's about vision, foresight, and patience. Investing for Tillinghast is a marathon, not a sprint. So, how can you replicate Tillinghast's success? Well, he suggests that investors first assess their own strengths. It's important to know what you're good at and where you might need help. Then, choose a fund manager who clearly articulates their investment strategy. You should understand the approach they're taking with your money. For the young and the bold, his advice is to take a long-term view. Don't rush, be patient, and always compare price and value. Remember, it's not about getting rich quick but about building wealth over time. In Tillinghast's words, investing is a game of patience and strategy. Play it wisely.